And again, I like these Saturday kind of events. Markets are closed. We can kind of kick back and not be as distracted. So we're going to focus here today on some really cool stuff. And these are seasonal trends and cycles and how to adapt these and add them to your kind of directional trading process to give you even higher probability trade setups. So that's what we're going to talk about here today, and I'll show you the statistics and some trades, different spread trades, just a lot of different things you can do with seasonality. So that being said, let's get rolling. So if something keeps happening every year over and over and over, wouldn't it be great to know and to use this information to identify different trading things that are repeating over and over to help your trading be more successful? Well, the big hedge funds know all about this, but you should too. And once you do, you're going to be easily able to use this information to increase your own trading success. So, I started back on my trading career back in the 80s and trading oil. So traded crude oil products, just you name it, I pretty much traded everything on the oil side. And then we branched out. I got into a company called Trans World Oil back in the mid 80s, and they were the largest oil trading company in the world. But the thing is, when we were trading, one of the big components of our trading was always look at the seasonal trends first. And I ran the trading group. I was, in Bermuda for 17 years with Trans World, ran the trading desk for 10. And one of the things that we use, I remember every year I'd have to put together my trading plan and submit it to the boss, for approval. But the whole trading plan was always based on seasonality statistics, seasonality, things that would repeat over and over, and things like gasoline moving up or crude or spreads. So there are just so many things that you can do to help your trading using these seasonal statistics, and that's what we're going to kind of really home in on and focus in on today. So the following presentation is purely for educational purposes. Any stocks, options, or futures mentioned does not constitute advice and should not be construed as a recommendation. Now, seasonality is simply a market's tendency to move in the same direction each year in response to annually reoccurring fundamental factors that could affect the market to one degree or another and in a kind of more or less timely fashion. So these are repeatable cycles that will happen, and we can look at the trends and the statistics to show, when they happen and when they occur. So commodity prices, for example, will reach peaks or lows during certain times of the year. So this is going to be due to fundamental factors like production cycles, buying cycles of commercial users around the world, et cetera, and consumption. So there are going to be times during the year when supplies are at their highest and demand is at the lowest. So these can really affect seasonal trends. Now, these are general trends, but they are obviously more variables that determine the market price. But this is a great place to kind of jump into to give yourself an overview kind of trend based on seasonality. Now, so whether you trade, even if you trade stocks or commodity futures or commodity spreads, odds are that seasonal tendencies will be one of the best and most consistent tools to use in that never-ending quest for trading profits. Now, these seasonal tendencies should be used not exclusively on their own, but as part of an overall trading process for selecting the highest probability trades. Now, many seasonal trends will repeat 87 to 100% of the time, year after year, and I'll get into some statistics on it. You'll be pretty amazed. But sometimes the trends don't happen, right? So different things affect the market. So one year maybe it won't. It happens, but it's a very short term, and maybe the cycle comes in at a little bit different time. So that's why you need to have this as part of a trading process, not just it exclusively. Now, these seasonal trends, when they're combined with directional cycles and price momentum, creates huge trading opportunities for you that can really literally trade or change one's trading year. So if you catch the wave perfectly, you can literally make your whole year in one trade. That happened so many times on, when we were trading, we might have one big, huge spread trade that would, make the whole year, even with the other trades being losers or something like that. So you can literally do that with these types of statistics to kind of help you guide along where things will go. So how to catch that seasonal wave? All right, so we want to catch that wave and we want to stay with it. But a lot of times it's hard to identify that wave and spot it. So the first thing we're going to do is kind of go through some steps here that are involved. First step, we want to be able to forecast price direction using momentum. And then the next thing we want to be able to do is time the cycles, an entry into a seasonality trend or out. And then we want to be able to spot that breakout before the breakout. So we want to catch that wave and we want to catch it, right at the right time to get a perfect kind of timing entry. Hold on one second. Okay, so using these seasonality trends in trading can be then thought of looking at, trying to spot and then catch that perfect wave. Now, once you're on that wave, you've caught it, you just want to stay with that wave, stay with the trend until it ends. Now, seasonal trades may happen only once, maybe, or twice a year in some cases in a single major asset class. But when you're scanning across multiple markets, the trading opportunities become really great. So we can use these seasonality trends to identify maybe U.S. stock equities, ETFs, index futures, etc. Bonds, seasonal trends on bonds or energy, gold, silver, copper, platinum, foreign exchange, real estate, agriculture, just endless, really. So once we can, know how to spot and look for the trends, then you can, add it to your arsenal. Now, step one is we want to be able to predict price direction. So, to me, it always comes down to direction, timing, and then managing risk. So to predict price directions, you have to have some good trading tools that can help you do this. Now, when you look at markets, all markets and all time frames will trade in cycles. So markets are never going to go straight up and they're never going to go just straight down. So they'll have cycles within these movements. So trading in any type of market environment is going to be all about that price direction, the seasonal momentum, timing, and then your risk of managing that risk. And the best trading tools for signaling price direction and market timing that I've found are based on momentum flows. So one second here. Now, what momentum indicators do is they measure price strength or weakness when measured across multiple time frames. So this really creates a dynamic trend cycle indicator that can help you to identify a new price trend early, like catch that wave, spot the wave, validate the strength or weakness of that trend, and then that will then help you to stay into the trade longer to maximize your profits. So when I'm looking at any security, basically, I'll go back to my momentum indicators, which we'll talk about here in a bit, to give me that probability of price direction. So it's really, really helpful tool. Now, to navigate a seasonal trend and time market entries and exits, you need trading tools that can, again, identify a market cycle turning point. So I always recommend trading some kind of model or system where the trading rules are going to be based on a repeatable, successful trading process that's clearly defined to you, making it easy for you to implement the trades. So the tools that I'll use, along with the seasonal statistics and seasonality stuff that I'll show you, are directional cycle timing model that I use, the power cycle trading model that I developed, which is based around momentum flows, fractal analysis, multiple time frames, moving averages, and very important to track your potential targets up or down based on I like to use Fibonacci support resistance. So these are the tools that I really like to incorporate along with the seasonal statistics. Now, the end result of using a trading system to time your entries into and out of a seasonal trend is that you make your entry and your exit decision based on the model that you're using and not the emotions of fear or greed. And that's what's typically is going to sabotage your trading results. So many times, you can, markets might be crashing and you get out too soon or get out too late, or you overtrade and chase trades. So all these different kind of emotional factors can really mess up your trading results. Now, the next thing or next step is the timing edge. So by incorporating multiple time frames, really helps to give you better clarity to the overall seasonal trend. And this should be used for any day trades or swing trades or spread trade entries within a seasonal trend. So what we're going to basically be doing is we're using a longer term time frame that allows you to see the big picture in order to get clarity on a seasonal trend that's developing or the sentiment that may be existing in the market. So we want to look up, look kind of longer term out and then see what those cycle trend is. And then we want to use the shorter time frames to enter the trade. So the shorter time frames should be in alignment or support of the general seasonal trend that you're looking for, if it's up or down, to show that trend straight or weakness. And then these are used for plotting your actual entry. Now, you're never going to get the whole picture of trend by just using one time frame. So that's why you want to use multiple time frames. Now, the next thing is then, how do you identify and trade the seasonal breakouts before the breakout? And again, this is going to come back to what we're going to cover next, is seasonality statistics and the patterns, these seasonal patterns. The power cycle trading model is based on momentum for giving us forecasted potential price direction, spreads for risk management for trading, kind of a market neutral type strategy, and then options are another great way to do these types of trades. So let's take a market review here, and I'm going to show you some good seasonal patterns that are currently, reflecting where the markets are, just on a seasonal continuation basis. So the first one is the S&P 500. This is the E-mini. These are what we call continuation cycle patterns. And so if you look at this data, you can see this, it'll go 25 years, 15, and 5. All right, so this kind of magenta is a 25-year series. So you can see that the current market where we are in the S&P, the cycle high based on the seasonality pattern is around the 17th of September, which is right now, right? So you can see here the last 5 years, kind of on a 5-year seasonal pattern, the market has been down to slightly down to kind of sideways. And you look back 15 years, it's been, more movement to the downside, and as it heads right into October. So you can see the October period here. And for the, 25 years, you can see it's really at a pretty good pullback here going into the first part of October. Now the big, seasonal, one of the second strong, I think, seasonal times of the year actually is towards the end of October. So you can see we'll get a cycle low around the end of October for the S&P, but actually NASDAQ is sooner. So right now, the markets are, trending down, sideways to down. So be aware of that, and that's how that kind of seasonal statistics can help you, with that regard right now. Now the next one is the NASDAQ 100 seasonality. So it's similar, but a little bit different here. If we look at where it currently is, it also tends to reach a cycle high around the 20th of September. So right about here is where we are right now. And then it pulls back into the first part of October. So you get a kind of a cycle low on that seasonal trend about the first part of October. So you can see here, and then it's a potential for really strong possible seasonal trend up. So, no matter how hard and horrible the markets look right now, a lot of times you just get back into that October period and you see a totally shift of these seasonal trends. That demand picks up, people start buying, different things affect the market demand side of things. So you get that kind of run into towards the end of the year, the last quarter kind of thing. So those are seasonal statistics that kind of verify that. Now let's take a look at crude oil. So here's the March crude oil continuation pattern chart. And so you can see it reaches kind of a cycle high as well around the 17th of September. So right about here. And then that's the 30 years, pulls back towards the end of October, 15 years, 5 years. So you see the general cycle trend is down into, October. Now, once we get in October, then there's a kind of a cycle trend back up. You can see that back up, and it tends to have a cycle low there about the October, right here, about the second. And the big one, though, is right here. So this is kind of the Santa Claus rally on oil. A lot of times it'll come right at the end of December. And a big part of this sell-off, the reason it is on energy is because in the U.S., inventories are taxed based on the inventory levels at the end of the year. So that's a fundamental factor that a lot of the big oil companies will sell off inventory, to reduce that inventory towards the end of the year, so they don't have to pay taxes on it. So a lot of times that selling is based on that kind of phenomenon. And then once that's done, towards the end of the year, after that period is done, then you get that nice blip up towards into Christmas. So those are a seasonal pattern on crude oil. Now the other one, there's so many different ones, but I just picked a few that everybody probably here trades. Now the next one is the seasonal pattern for gold. So this is a February gold contract seasonality trend pattern. And so it tends to get a cycle high right here about the 3rd of September, and then look at really big pullback again all the way into October, and basically just trends lower until you get again into the end of December, January. Then a lot of the gold starts being bought up because of the Chinese New Year's, India, they start buying more gold a lot of times for, kind of the holiday period. So you get that big gold surge right here, end of December. So if you can, look forward and have these trends, know they're coming up, then you can sit in the weeds and just wait for them until they happen. Now, the next thing though we want to do is confirm the cycle trend, because sometimes maybe, it looks like it's going down, but you might have a counter trend back up because of something. So we're going to use our trading model to kind of give us confirmation and be in alignment with the trend in order to either take it or not take it, or maybe get a better entry, get in earlier, get in a little bit later, where we get a better entry timing on a trade. So that's the other big part of the kind of the process. Now let's take a look at the current market, what I call top-down analysis. And what this basically is we want to start out with our kind of the macro time frame, which I usually use the monthly time frame. And then we're going to drill down. We're going to go down from the big time frame all the way down. So if we just take the S&P 500, SPX, we'll just use this as an example. And 1 second here. Now this is the trading model that I've developed. A lot of you have the model, but if you don't, we're going to flip this to the monthly contract for macro. Now these, this histogram down below, these are the momentum indicators. So let me put it to daily so you can see it a little bit more clearly. So here's just the S&P 500 index. So if you look here, the trading model is going to be based on what I call lower study 1, lower study 2, and I have the cycle reversal indicator that we use. Now this momentum is what gives us a probable direction, and the cycle 1 is a fast measurement of momentum, 2 is a slower confirming measurement. So you can just kind of see here the cycle hard down, right? And then look at the momentum hard down. Now the momentum, then the histogram starts turning back up. So we're running out of selling, so that not as severe to the downside. And finally, we get up here, crosses back over, positive momentum, and you start getting a price moving. All right, so cycle 1 is fast, 2 is I use for confirmation, and then right here was actually would be what we would say, consider the buy trigger, exactly right there. That would be on SPX. And then look at the move up, huge move up. Okay, and then our cycle reversal is an indicator that we use to give us advance forward warning of this potential change in trend cycle. Now, what we're going to do with this trading directional process, we want to look for seasonal trend waves, but to get better entry into those waves, we're going to use the cycle model, which is based on momentum and this reversal indicator, to align with the general trend to see if we want to get into that trend. So that's the basis. We'll go through that in a few minutes, but here's the first overall kind of market review here. So the macro view, if we look at, let me get rid of these trend lines here. Actually, I'm going to leave it. So here's the monthly time frame. So you can see the general trend is now down based on momentum. So we're in a downtrend even on the macro time frame. So you can see it trending lower, momentum cycle 1 and 2 are down negative. And you can go back and look at other years where we've had big sell-offs. So if you go back to, let's just go back to 2008, last time we had a massive move to the downside, you can just pretty much see how the momentum indicators pretty much picked the bottom. So here it was back in 2009. So you can see massive sell-off. The monthly macro, which I call it, cycle 1 and 2 are down. And then finally, we had to kind of all clear based on the macro right here on the October, about the 9th. So then it turned up and went to the upside. So currently though, we're down on the monthly. And then what I'd like to do is look for any major, moving averages that we're coming into as for support. So the next level down, we go to the weekly. So think about this kind of the analogy is that if you're flying in an airplane at 30,000 feet or so, you're going to see a bigger, clearer picture of the overall area that you're crossing. And then if you want to really focus in and look at details of a certain area, you're going to lower your altitude. So we can lower the altitude with our charts, going to what I call the weekly or long term, and then we can go down from there to the daily or intraday. So if you look at currently where we are here, we just broke this trend line that's been in place for quite a while here. So this trend line was back from that swing low in June, and then we had this move up, and then we broke that trend line right there. You can see that, well, put on the daily, you'll see it more clearly. But cycle, we did have a kind of a bear market short covering rally. Okay, so you can see that on the weekly, really nice rally that started back here again in July, and a pretty strong, nice rally up into right there, into that trend line, that descending trend line that came in right there on the 15th of August. And this is the 50 simple moving average. So it's a perfect place to stall. So that's the daily. So we're breaking down again there. So the next area I think we could easily move towards would be 36.34. That's that prior low. And then let's just take a look here a little bit further back. Then if that breaks, if this area breaks, you can see we're currently, this is the 50, this is actually the 150 week moving average. So that's your support. Our support is right through here, price action support. You see the kind of bodies of the charts, the candles. So that's coming in at 37.96 and kind of aligns with that 150 period moving average. But then if we break that, you'll see the next big level will be down here to that 200 week moving average. So we could possibly retest the lows down here at 36.60 or whatever, and possibly push down and test that 200 week. Now, typically, unless like this move down here, this was COVID, you'll typically hit that 200 week and it'll just stop. I mean, it won't stop dead in the track, but it could just, consolidate and go back and forth. So you never really want to sell short into a key 200 day or week moving average. But I think that there's good probability that we could head that direction. So then we break it down to the daily, we can see even more clarity where it's going to go, based on that picture here. So you can see the 786 retracements, kind of the next level here at 37.87, and then back to that prior low back in June. So just look at that perfect trend down. We cycle, these are the cycles, cycle down, cycle up, cycle down, cycle up. And if you look at these cycles and look at the momentum, that's what gives us the potential cycle direction. So if you didn't even look at the price of the chart and you just looked at the momentum, you can see it's going down, right? So just don't even look at the up and then look at the up. So here's going down, price is going down. Here it starts to kind of consolidate, runs out of selling momentum to the downside. We get a little cycle reversal back up, and typically in a key moving average right there to either a 50 or 21. And then we cycle up here. We run out of juice, run out of momentum, cycle back down, and cycle back down, etc. So that's kind of the momentum flow that helps to really identify and confirm these types of shifts in cycle. Now, when we then add the seasonal to it, that really makes a dynamic way to kind of look at your trading. So that's kind of where we are currently. We've got some potential more downside, and any kind of movement up right now still would be just kind of a bear market rally. So question, which tools support this seasonality chart Well, these are my trading tools. This is my power cycle trading model, which is again based on momentum and a kind of reversal indicator that I've put together. So if that's your question, I'm not sure. All right, so let's take a look. We did the market top down, so that's kind of an overview there. Now let's take a look at some seasonal trades, and let's look at some trades that are seasonally setting up that I call on the horizon. So kind of part of the plan that I look to is put together, okay, when we can look at with these statistics, I can go 60 days out, so I can see what's coming up, and I can look back at prior statistics too. But we can always then be ready. We can build a watch list and then be ready for when that trade tends to kind of have a seasonal either move up or down. And then we're going to use the trading model, momentum indicators, to help us catch that seasonal wave. So let me kind of piece it together for you here. So first off, I want to show you a seasonal trade that just came and went on a July contract. So this is what it'll look like, these statistics. So here it is, July 2022 trades. All right, so out 60 days, I can go out and look. And if you look at this, just to go back in July to show you the performance based on the seasonality. And then I'll show you the performance based on the seasonal trend, but using a cycle model to give a better timing entry or exit. So first off, just look at all the different trades. I mean, they're just a massive amount that you can do. So here's one, natural gas, December contract, soybeans, euro dollar. Here's a really powerful one. So there's going to be something for pretty much everybody. So think of it, if you've never traded any commodities or futures at all, but you might say, oh, wow, look at the S&P. Well, I could have done that. I could use SPY. So look at this one, 100%. So out of the last 15 years, these stats are based on a 15-year continuation roll. So you can see the winning years right here, this column, 15 years. So it's had 15 winning trades. So it shows you seasonally, based on their seasonal model, when the entry happens and when it exits. All right, so you can see the seasonal entry was on the 2nd of July, and then it was out the 22nd. Now what I do is I look at this, I say, wow, that is fantastic. What a strong trend. But it might not happen again this year. So what we're going to do is we're going to use, we know that, okay, it's like you're laying in the weeds waiting for the prey, right? So based on these statistics 15 years back, that the S&P 500 is going to be seasonally high probability that it'll go up early July into the mid-July. But to confirm that, we're going to use the momentum indicators to align with that. So I'll just pull those up real quick, and I'll just put it on the S&P futures, so kind of in line with this. So if we look at the S&P futures, and I go back to July, right in here, so July 2nd, right here, so down below, right here, our model would have gone long right here about the, let's see here, right here, I've got it going long here. I can get it more fine-tuned for you, but it was long here on the 15th. Okay, so I'll mark it for you so you can see. So the model that I use here, see that these two arrows, that's green and yellow arrow, that means cycle 1 and 2 are positive. We had a cycle reversal. So that's where I would have had the entry. I know that the trade looks like potential for a big move, but I want to have the best entry as I can in order to, not have to fade any equity swing. So right here, the system would have gotten in right there on the 15th. And this is also what we call volatility squeeze. So this was a really juicy trade. And then look where it went. So from the 15th, using the trading model, it then had a fantastic move up. That's into the 200-day moving average, stalls out there. So again, we're using the seasonal trend, but I'm looking at my other indicators that I use. So there's a 200-day. I know it's probably going to fizzle out, and then sure enough, it fizzles out. Momentum shift, cycle 1 and 2 go down. So let's take a look at that aligned with the seasonality. All right, so let me pull that over. So trying to catch this wave, right? And we're going to see if it happens again. Now, sometimes they can happen earlier or later. So you can see here, this was on the 2nd, and the system that I used got in a little bit later because it was a better entry based on momentum, but it still caught that wave. So here are the breakdown of the statistics. It really gets detailed. So you can see when you dive into each year, you can go back and look, you know, all the way back to 2007. So you can see again, here's the marks the trade entry on the 2nd, you know, around the 2nd of July, and the exit around the 22nd. All right. So out of those 15 years, 15 winning trades. Now then you can see the entry price right here was right here, bought at 43.42.75, and then got out here at 43.59.75. So, you know, 16 points, 16.75 points. So if you did one contract, that was $837.50 on the S&P. Now you don't have to use the S&P. You could use the SPY, you could use SPX, but this is showing you those statistics based on the futures contract. So in 2020, though, look at that, it had a move of same entry dates, but it had a move 136.50 points. So this was a one contract if you did was $6,825. So pretty amazing stuff, and just does a lot of the kind of the statistics are really helpful in my opinion. So then we look at the other thing that is nice. Here's your window when that seasonality tends to trend. So it really makes it very defined for you. You see this, the blue line is your kind of where the market is now. I mean, that's the trend. I'm sorry. And then here's the price action right here. So you can see it came down right into that early July, kind of goes flat, and then we would have gotten in right here, and then you see that seasonal trend. So there's that kind of window. So really good information there. Now, here's the chart I just showed you on the actual chart. So the power cycle trading model would have been in on the 15th based on that momentum signal. Okay, and it would have stayed in longer. It got out the 19th right here. Whereas if you look at the seasonal trend, it got in the 2nd, a little bit earlier, a little bit worse price, and it got out earlier on the 22nd, so it didn't hang in as long. So that's the really great thing too with momentum, is that we can maximize profits better than if we're just blindly following these seasonal trend kind of dates. Now here's another example. This was one for May crude oil. So this was set up on the 16th of August and out the 27th. And again, based on seasonal statistics. So here's the seasonal stats for the May crude oil contract right here. So again, this has been a winning trade 14 out of 15 years. Okay, it's had one losing year, which was right here. And we can go back and look at that if we have time. So in this year, this was, and I'll write this down, 2013, and that's why the momentum indicators will you probably would not have made this trade. So we'll go back and look at that to see if that's the case. So I'm gonna write that down. So 2013 was a losing trade. So that entry was again on the 16th and then out on the 29th. And it got in at a price of, it bought in at 97.45 and then it got out at 96.97. So that was a losing trade, not much, $480 per, that'd be per contract. All right, so if you did one contract. So, and this will give you best equity, worst equity, et cetera. It gives you really great stats. So the overall, on a per contract basis, the average kind of net profit here on these stats was over these 14 winning trades out of 15, out of all 15 trades, it averaged $1.29 per contract, which would be $1,290. So that would be your kind of cumulative, percentage of or cumulative revenue off of this just one kind of trade setup. So that's a look there. Now, if we look at the chart, here it is. It tends to kind of buy right here, right in that seasonal pattern, right in that area right there. So again, here's the crude. So here's where the seasonal entry was right here, the 16th, and then out the 27th. That's a seasonal entry. So the trading model got in right here, the 18th of August, and it stayed in until the 25th. So it got in right here. See cycle 1 and 2 go positive, had a cycle reversal. That's telling us, okay, things are maybe starting to shift, maybe starting to change. So let's be looking for a buy. And then also the thing that we would have seen is a volatility squeeze, which makes this even a more juicy potential trade. So then our momentum flips up. We have a breakout to the upside. Seasonality is in our trend, with our trend right here, which gives you more confidence for the trade. And then it just trends. It stays right on that moving average, the 21 period, trends up, trends up, trends up. Really nice trend. And then we finally start getting momentum shift. We got a cycle reversal right here, momentum going down, and boom, just get out. And get out before actually the seasonality trend before that. So this made more. If you follow the system here, you would have made more on this trade than the seasonal trade made based on those seasonal entry points. So this would have made roughly, let's say if it got in here at, let me see here, let's just put the price here. So let's say we got in right here, we took the average. I'll pull up the chart. Let me just pull that up and make it easier. So is everybody following along? Any questions? Okay, so here's going back, looking at the chart, just currently you can probably see a little bit better here. So this got in, let me just make sure the dates, the system got in the 18th and then out the 25th. So right here, so here's the 18th, right here. See the cycle 1? Here's cycle 1 going positive right there. And I use a different other time frames too. I use the 4 hour and hourly, but this would have been our entry point right here, about the 18th, right there. Cycle 1 goes up, cycle reversal. Other, the other time frames I like to monitor were in alignment. Those were positive on momentum. So then you can see it kind of pushes up, and look what it does. It pushes up into a key moving average, and then it stalls out, and that's when you get out right there. That was out then on about the 25th, 29th or so. Let's see. Yeah, this would have been out based on using the model, would have been out right here about the 30th. All right, so this moved from, if you follow the system here, and we got in at the 18th right here. Let's say we got in at, make it easy, 87.50 per barrel. And then got out here at, let's say we got out at 96. So what is that? You would, if you did the futures contract here, you would have made 96 minus, we'll say just 87 times, yeah, so you would have made, let's see, only $90. So let's see, yeah, 96 minus 87, that's 9 ticks or 9 points times 100 actually. So this would have made $900 based on the system entry there. That's per contract, okay? So then the seasonality didn't do as well. It did okay, but not as good as the CUs in the system. So that's a kind of an example there for crude. So question, once you enter these trades, what stop guidelines do you use? With recent volatility, it would be hard to stay in the trade for the duration of the seasonal bullish trend. I just use the momentum, okay? So here's just a good example. So, if you have a seasonal trade, the tendency is 93 to 100%, then tells me, okay, let's stay with the trade a little longer versus if you're trading blind. So you can see here, if you just use the system based on just the daily time frame, you would have gotten in right here. Momentum stayed positive, right? So no need to get out. You know, you'd be looking like this. If you're just looking at the system, you know that the seasonal trend, that seasonality, it gets in right here on the 16th. And we would have gotten in right here on the 22nd. Okay, now if I was long this trade, I'm feeling good. Momentum's up. Now, as far as the stop loss on this, I'd probably look at the average true range. There are a number of different things we can look at as to help for volatility in the range. But you can see momentum stays up. Now, if this thing crashed down hard, we're going to use other different stop loss rules, a lot of times based on average true range or a break of key, maybe moving average, or if we're using options of percentage of that option that may go against you. So that's pretty much it. But looking at this chart, I would have been really comfortable with the trade. Now it broke here, the 21 right here, but momentum is still up. We could have looked at the lower time frame too. I like to look at the 4-hour, but this one did really well. And if you want to get out, but look at the perfect entry. See, the main thing was that entry, and then once you're in, maybe you got flushed out right here, but you would have still been out at about, let's say 92 and in at 87. So you still had a nice profit on that. Or you might have used options. So a lot of different things you can do. But the main thing is trying to, look for kind of getting that edge from potentially these great seasonal statistics, then that aligned with the momentum indicators that I use. Okay, so let's take a look now what's coming up. So this is on the horizon. These are the trades coming up in October. Now, currently, right now, you can see the different choices and things that you can start putting on your watch list to monitor. Some might be the ones you like to follow. Others might be things that you've never traded, you don't have any interest in. But here's an example of crude. So this would be a long crude oil trade. Tends to go into seasonally on the 4th of October and out, 13th. So kind of a short trade. Now this has been a winning trade 12 out of 15 years, so 80%. And then you see that the average profit per trade has been 1,026. So with this coming up, I would just be, again, looking at, I've used the trading model and be looking for these dates. Now, if the market momentum is down coming into the 4th, I'm not going to do anything. But if it's starting to turn back up, then that's a trade that we can look at. So if I just, for example, I know this one isn't as high a probability, but it's still not bad. 12 out of 15 years. So I'll be watching this one just with the trading model here, monitoring it as we get into October. So here you can see we're down, pulling back here right at that 85 level, not showing any signs of kind of flattening out or momentum starting to shift. But once we do see this shifting, and if it's shifting in that time frame of early October, then that can give you a good alignment to, okay, let's take a shot with going long crude, something like that. And you could use USO as well, or options. Okay, so then I come down here and look at this one right here. This is a big one. This is natural gas. So you can see it goes short March natural gas contract every year, like around the 12th of October, and then out the 10th of the 24th. So this has been a winning trade 15 out of 15 years. And the average profit per trade has been $1,582. So then we can drill down more into those statistics. If I want to look at it, oh, wow, that looks interesting. Let's take a look. So we'll look at that. Now, here's some other stuff. Here's euro dollar, 14 out of 15 years. Here's the soybeans. Soybeans are really good ones too. Here's 14 out of 15 years here. So just a lot of things to look at and choose from. Some may be ones you're interested in, others may not have any interest in. Here's December, the Dow. So you could do the diamond, you could do the Dow Jones futures. So it gets in around the 10th and out the November 10th, 87% probability, 13 out of the last 15 years. $2,480. This will be one to definitely keep an eye on right here. So I'll be watching that. So then what I do is I take the ones that I'm interested in and I make my own watch list. Okay, so this one would be one that I want to watch, the Dow. I want to watch this one here. Those two, one has, 15 out of 15. This was 13 out of 15. Not bad. We can definitely time that one with the model really well. Probably maybe look at decent soybeans because those are really liquid. So maybe crude oil. So I would have these on my watch list, and then I'm just going to monitor those each day. So I'm going to know when these entry points are going to be, but then I'm going to use my trading model to enter it. Maybe sometimes it might enter a little bit earlier or maybe later, which gives you a better entry than the seasonal dates. So if we drill down into that natural gas contract in March, again, this is selling, going short natural gas. So you can see that the stats here, here's this year, it's coming up. So entry will be October, here it was last year. So this was the October the 21st. So this was October 21st, and then it was out October 12th, excuse me, then out the 12th, right there, the 22nd. So this was 10, 12, 21, let's put that in. And then out, and this had a profit of $3,240. Now, out of these trades, the average profit per trade, if you'd done this religiously, was at $1,582. So 100% reliability on that trade, just some seasonality. So it gives you, just makes trading easier. You don't have to be just totally thinking, okay, man, the S&P is down hard today, up yesterday, et cetera. But if you have these kind of things to look forward to down the road on the horizon, then you can be more focused on these types of trades, which tend to turn into pretty good trades. So here's the seasonality statistics on March natural gas. You can see how dramatic this is. So here it is, pretty much where it tops out there, in October. So this is shorting this contract. Look at hard down. Now this natural gas just pretty much gets obliterated until you get towards the end of January. So that's when they're starting to put together, start restocking the natural gas flows, inventories. So that's a look there. Okay, and then if we look here at, just go back here, I'll pull up natural gas, and you can see last year what it did. And this got in let me get the dates again here so you can see. So these were, the dates were going short around the 10, 12 short, and then out 10, 22. So some of these trades are not long, some are real long. And then I just follow the momentum and stick with the trade if you want. So here's just, we'll put up natural gas real quick, and you just kind of see last year what it did. So here's natural gas. So let's go back here. Last year. So the entry on the seasonal was right on the 12th. I'll just put that in right here. And then it got out the 22nd. So I'm going to mark this trade. I'll show you what the system would have done. So the seasonal entry was right here on the 12th of October, right there, right here, short, okay, went short, okay. Then had a little bit of retracement back up, came back off, got out of the trade the 22nd, which was right here. See, fairly short-term trade right there. So shorted here, out here, and this made, well, we'll go back and look. So looking at the trading model, that's pretty in line with what the seasonality trend was. So I would be using another time frame with it, but just from the daily, you can see that this probably, momentum was down. So it was in alignment with our momentum indicator. So this definitely would have been a trade that you would have looked to take based on that seasonal statistics. And then you can see it start shifting up. We had a cycle reversal here, so it's perfectly in alignment there on that exit. So it would have been out right there. So not, again, confirms that trade. And that trade, would have made, this would have made this last year, that if you did that trade, it made $1,370 per contract. So that's a look there. Well, that's a good point. You would think that natural gas would have more of a floor, and I agree with you. But right now, look what natural gas is doing. There's certain things that natural gas is really kind of moved down. It's just really sideways, so it could shift. But right now, and this is October, so I would just be watching it. It may get to October though, and maybe it's not down. It could be up, so then you wouldn't take the trade. So that's a good point though, because the fundamentals, I mean, with the European situation, that should put a little bit more of a floor to natural gas than we've had in the past. So yeah, I agree with you on that. So that's why I like to use the cycle model, because let's say the seasonal trend shows you, okay, get short October, but if we see our momentum is up, then I'm not gonna take that seasonal trade. So that's the beauty of having the combination. So let's say that, for an example, what if, let's say the seasonal trend went short, would go short on this date here, so July the 4th or 5th. Now that's seasonal, right? But if I see my momentum indicators are up, I'm not going to take that short. It was probably actually maybe had a long. If you look back, this probably went long. Okay. So here's that continuation pattern, pretty ugly. Now the next thing, or really cool things to do, is spreads. I love to do spreads. Now back, when I was running the oil group, again, we were, the Transworld was the largest oil trading company in the world. It was Transworld, Fibro, and Mark Rich. So we just did thousands and thousands of spreads, different types, gas to crude, crude to heat, natural gas spreads, timing spreads, whatever. But these seasonal statistics on spreads are great too, and then apply momentum also to the spread to look to catch the wave. Now, the great thing with spreads is that they're kind of what we call a market neutral strategy. So you're long and you're short. It's a pairs trade. And what that does for you is it reduces your trade expense or your capital at risk because you're long and short, but it also reduces your margin that you're required to put up. So it also has an effect there. Yeah, we can look at, let me write that down. Look at SPX Diamond late September and October. Okay, yeah, we'll look at that. Okay. All right, so here's the beauty with spreads. Now think about it, okay? So why would you trade spreads? Okay, now spreads can then move favorably in several different ways. So this is the really nice thing with spread, just kind of break it down for you. So let me say one example. One really great spread trade that I like a lot is if I see a trade where maybe you go long gasoline RBOB and short crude. All right, so if you think about it, so the long rises fast. So you've got a number of ways to make money. So the long goes up faster than the short. So let's say you're long gas, RBOB gas, and short crude, okay? So RBOB gas could go up and crude could just stay flat, or it could actually go down. So you're making that spread difference, right? The other one is, okay, what if the long rises, but the short moves sideways? Okay, so here's the gas goes up and the faster than the short. So the short goes up a little bit, but this spread is bigger there. Now here's if gas goes up, but crude goes sideways. So gas goes up, but crude goes sideways. So you're making that spread. So you could even make it if the long goes sideways. So here's gas just goes sideways, but the crude side of it goes down faster. So you're making the spread, right? So you're long here. The gas doesn't go up at all in price. So you're basically flat, making nothing, but your short side of the trade is making big money. Or the long declines more slowly than the short. So you could even be in a situation where your long gas or whatever it might be, and it's going down too, but the other side of the trade, the other pair, is going down faster. So you can see how you make money there. Or the long goes up and the short declines. That's the perfect one, right? So it just gives you 5 different ways you can actually make money versus if you're just strictly going long, you can only make money if it goes up, or you can only make money if it goes down if you're going short. So that's the beauty there. Plus, it reduces your capital cost based on that margin. You're not going to have to put up as much margin because you have it paired. You're long something, but you're short against it as long as it's kind of same relative kind of commodity. So that's the kind of the backdrop there. Now here's what's coming up on spreads. Okay, so I can go out and I can look at October. I can look at November. Put together my watch list of things that are coming up. And if I'm just looking at currently what we're coming up to in October, what's going to be coming up, I've got things that I could look at. I could look at soybean spreads, timing spreads there, soy versus wheat versus corn, dollar FX foreign exchange pairs, live cattle versus feeder cattle. Some of these you may not have any interest to, but once you drill into them, you can see some other opportunities. So if maybe you're tired of trading the way you're trading now, and you want to just kind of start shifting into a little bit of this, it's another alternative kind of income stream that you can look to use. Now, and cattle's really good. Hogs are really good, really liquid. Gasoline is crazy. I like that. These are really crazy spreads, but they can do really well. So here's going long the spread. You're long June RBOB, but you're short February. All right, so this is playing a timing spread. So you can see it's been a 14 out of 15 years winner, average profit $892 per spread. But here's one down here. Again, here's that natural gas. 100%, 15 out of 15 years, it's been a winning trade. So on average, it's made on average over 15 years, $1,057. So that would be definitely what I'll be looking at, right? So you can look at that one, and but you want to have the system, align with it. So if you look back at the details of this past prior years, you can see last year got in the 26th, out the 17th, and made $3,490. Okay, so you can see the average on this one's 1,056. So let's take a look. I'll show you what the spread looks like from last year. Let me pull that up. Find my spread chart. One second here. Let me find it real quick. I thought I had it up. Just looking at my spread charts, my charts here. Let me see if I can find it. Here it is. Okay. All right. So this is the spread. Okay, between And this is going to be a short trade. Okay, this is going to be, actually, it's going to be a long trade. So you're going to be looking to buy the March contract, but sell the Jan. So you're doing a front to back where you're short the front end, the closer in, the January, and long further out. So this will be something like this. So you can see last year, the entry was right here on the 10th, 12th of October. Let's go back and look at that. So went long right here, the 12th of October, right about here, I believe. So this is March natural gas minus January. All right, so here's the spread. So this, the model system right here would have gotten in, I believe right here, and then out the 22nd right there. Yeah, okay, so we mark the trade. So the seasonal entry would have been right here, the 12th, right about here. And then the seasonal exit would have been right here, the 22nd, right there. That's amazing. Okay. Now, if you look at the trading model, and this is the same model, but using a spread, momentum, look at momentum. So we get up there now, also using lower time frames like a 4-hour and a daily, I mean, an hourly. So we're going to see this turn a lot quicker. So this would have been a really good trade, actually. So you would have gotten in right here at, let's say you got in at, say you got in at 44 cents, and then you got out here, let's say you got out at 34.49. So here you got into the spread at minus 44 cents. So March natural gas was $44 per MMBTU, per 10,000 MMBTU below. So March was trading below Feb, and then it goes up here, and now it's at 34. So you would have made 10 points, basically. 10 points, I believe is right, times 10,000. So that would have been times, yeah, so you would have made 10 points, 0.10, that's right, times 10,000. So that would have been $1,000. So from here, if you got in, got out here, that's 1,000 per spread. Now your margin requirement would be less too. So you look at your profit based on that margin that you would put out on that spread. So that would have been $1,000. But you can see these things, and then it makes it pretty easy to trade the spread based on the seasonal statistics, but also then in alignment with our trading model. So here's the window right here. You can see it's kind of outlined right there. So here's price now. So it could go back and forth, but once we get into this mid to late October, we want to be looking, okay? This thing could actually trend all the way into December. So you could, so this would be a long-term trend trade. So one thing you could do here is just trade in and out of it. So instead of just being a macro, just put the trade on and sit, you've got, this thing can go all the way into December. So get in here, got out here. Let's say you come down here, you get back in, out, man, massive one there. That's a big one right there. So a lot of different opportunities on that. So let's talk about how to bring this all together in order to capitalize on these seasonal trends using spreads and also options. Didn't talk as much about the options, but this other great way to trade them is also to incorporate the option side of things. Let me just double check the questions here. Okay, so I missed your question, we'll go back and look at SPX, and you want to look at the S&P and the diamond end of September, early October. We'll do that in a minute. But let me show you what I've got coming up. So I haven't done this in a couple of years. Going to be doing a boot camp, I call it, on trading seasonality, cycles, and trends. And it's going to be a really great class, a lot of fun too. Something maybe totally that you haven't looked at and used before. That could be another alternative for your trading or additional kind of a trading stream of income to you. So I'm going to be doing this boot camp here. This will be next Saturday, the 24th of September, starting at 11 a.m. to 2 p.m. Eastern, and then we'll finish up on Monday, the 26th, from 5 to 7. So we're going to have plenty of time to cover everything, 5+ hours. So we've got a great bonus package here for everybody. So let's go through the details here, and then I'll take more questions. So if you want to do this, I've got a number of different kind of packages, so you can, fits whatever maybe you need. And let me get the payment link for you. So if you want the package with the indicators, some of you probably already have the indicators, so that's why I did a kind of a different package for some. So use this link here. So powercycletrading.com/SEA. So if you look at that link, click on it, and let me double check it works. And it does. So just click on that link. And if you want this package, you're going to get this package. Covers the course, gives you the custom indicators that I'll go through what you're going to get. And then we're all the bonuses. So I've got the seasonality statistics that you'll get for free for the next 2 months, and all of the different bonuses. So that's your link there. So let's take a look at what you'll receive for this package. So basically, you're going to get the live seasonal course. This will then be recorded. You're going to get my momentum indicator directional trading model, the Power Cycle trading model. So this, if you look at my website, this model goes for $597. You're going to get my cycle reversal indicator. That's part of the indicator package. That goes for $197 on my website. And then another indicator that's really good for these kind of seasonal trades, my opening range high-low breakout indicator. Okay, so you're going to get those 3 indicators, and we'll go through how to use them in the course. Then you're going to get my price target mapping course. These are all my prices on my website. And this is a really great course that did back, a while back, but it really goes well with the seasonality course, because it's a totally dedicated course on pairs trading for offense and defense. So this goes through a lot of great how to use pairs and spread trades. So trying to give you everything you can get or need to make you successful for this kind of new trading. And then you're going to get access for 2 months to my seasonality vault. Now, if you stay on then as a member, you'll get these updates every month in addition. All right, and then you're going to get 30-day trial membership to my trading club, which is $97 a month, or annual membership. You'll get that for free, and you can start this whenever you want. You don't have to start the trading club right away. If you want to do it a week or after the course, you can do that. Just send us an email. Then we'll do a live Q&A follow-up, and then you're going to get another bonus here, my futures trading guide, commodity trading guide. You'll get that, telling you a lot about the futures, specs like that, things like that. Now you'll get my trading model tutorial that covers how to use the Power Cycle trading model. So this is really everything you need to trade these seasonal trades or seasonal trades that are going to be coming up. So this will really help you get better timing into your position. So that's package 1. Now, a lot of you already have my core trading model. So from other, other type of events that I've done, or from, maybe just already you've had it for a long time. So I took that out, and then if you want to just take the course, it's $197. Now, as a really great indicator, just to give you a bonus for anybody that wants this price, this cycle reversal indicator is just really a great indicator. And this is what I developed this indicator actually for these types of spreads. So you'll get the cycle reversal indicator. You're going to get the bonus of the seasonality vault. You'll get the 30-day trial membership, futures commodity guide, but you won't get the other 2 indicators. So this is $197. So if you want to jump in for that, let me give you the link on that one. So that will be powercycletrading.com/SEA1. So use this link here. Okay, that link there. Let me make sure it works for you. And I'll go through what's going to be in the course. A lot of you are asking about the charts and the statistics. Well, that's going to come with the course. So if you take the course, you'll get all of my resources that I use. Now, these are, question is, are these all futures? The statistics they give you are based on futures, but again, you don't have to use futures, right? Because there are a lot of these things you can use ETFs, right? So if it had an S&P trade using the S&P futures, well, we could just do it with SPY, or if we had a diamond futures trade, we could just use the diamond or something like that, or the NASDAQ, we could use QQQ. So a lot of different ways to do it. And let me see here. Okay, so there's a link there. Okay, so use this link if you just want the course for 197, but you're going to get the cycle reversal indicator with it, and the other handouts are the other bonuses. So that's 197 there. Now, if you want the package with my alert service, where I'm going to give you, alert trades, and we'll go through that. I've got 2 different packages on that. So you could do this course package 3. So if you're looking for more help and guidance in your trading, then this is a really great package that you should look at. So this package here will give you my 4 alert services. So for 3 months, okay, and then 4 months included to the trading club. Now, if you want to renew, then you can for additional 3 months or something like that. So this is going to come with everything in either course package 1 or 2. So if you do course package 1, it's $397, or you can do course package 2, which is $197. You can still do it with the alert service, and I'll show you the prices for that. So with this, we've got 4 different alerts that I sent out. Either might be a butterfly long condor alerts. We do a lot of counter diagonal alerts, breakout reversal trades, basically debit spreads, and then earnings trades. So you're going to get, with this package, all 4 of these alert services. So if I send out, could be during the week, I might send a butterfly, next day maybe a calendar breakout on a debit or earnings trade. So you're going to get all 4 of those. And if you do this package, then you can have it with either that course package 1, where you get all the indicators, all the bonuses. This price will be $811, and there is a 2-pay if you'd like 2-pay. And let me give you that link here. Or if you want it with just the 197 package, it's $611, I believe. Yeah, $611. So use this link here. So there it is. And there is a 2-pay if you'd like to use that. And here's what that link, let me make sure it works, and it does. So here's the link that you can use there. It gives you the course, the indicators, all the recordings, all the bonuses, 3 months to the alert service, 4 months to the trading club, futures commodity guide, etc. And there's a 2-pay option for you on that. So that's if you want the full indicator package. Now, if you want the package 1 with its bonuses, but less the big trading model indicator at $611, and this one will be powercycletrading.com/C1 right here. Make sure this one works. All right, so here it is there, and this also, there's a 2-pay if you prefer that. Okay, so there is the different course packages there. Now, here's kind of a summary of the alert service year to date, or actually over the last, since 2018, I started the first service, but it's done really well as far as the winning trades. We've had a total, this is with all 4 services combined, we've had a total of 508 trades closed out. Of those, 393 winners, 17 break even, 98 losers. So a winning percentage of 81%. Now these are unaudited, but these are kind of the trade summaries So really, I look for high winning type trades, just to have everybody feel more confident and comfortable with the trade. So not looking for any big equity drawdown. So these are, those trades. Now these are all going to be option type trades that when I send out alert, it'll have an option, spread that you could use. Some members just do their own thing, but I'll always give you an option spread as well to go with the trade that I send out. So that's the full summary. Now here's a breakdown. These are the butterfly long condors since started this back in June of 2019, and to Friday's date, we've had 104 close, 79 winners, 5 break even, 20 losers. Again, 81% winning rate there. Again, unaudited. Now here's calendar and diagonals spreads that started this back in June of 2019. We've had 151 trades closed out, 119 winners, 3 break even, 29 losers, 81%. The first service I started was back in May of 2018, the breakout. These are basically debit spreads. Might be a put debit spread or a call debit spread. We've had 156 trades closed out, 115 winners, 6 break evens, 35 losers, 78% win rate there. And then when we get into earnings season, we do earnings trades based on a certain strategy that I prefer. And these have been really high winning percentage trades. We've had 97 trades closed out, 80 winners, 3 break even, 14 losers, 86% win rate. Started this back in June of 2019 as well. So with the course, if you do course package 1 or 3 with the alert service, you're going to get all the indicators. So you'll get my power cycle trading, dynamic trading model. This is based on a 5-study set model, which will give you volatility squeeze, momentum flows, and we'll go through this indicator, the model here in the course, how to use it. So this is I've been using this model for a long time, and it's been very, 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 very good for, market direction. So you'll get that. I've got it available for Thinkorswim, TradeStation, TradingView, Ninja Trader 7 and 8, and eSignal. And so I've also got it for wealth charts if you had that platform. So that's indicator 1. Then indicator 2, you'll get my cycle reversal indicator. This is a great indicator we use for everything, pretty much spreads, price direction, etc. So this is a 2-study set. We've got the upper and lower study. So it'll give you actually the arrows when we get a cycle reversal. You see right there, cycle reversal, market goes down. And we'll go through this in the course, how to use it. I originally set this indicator up for spreads, and then we adapted it just for everything else because it works so well. So get an up-down arrow when that reversal happens. I've got this for Thinkorswim, TradeStation, TradingView. And again, you can have one platform or all platforms, and there are no additional fees or anything. Once you buy the model, it's yours. And then you're going to get my opening range breakout, high-low breakout indicator. So this is a really good one for these type of seasonal trades, where maybe even just from a day's trade where you're looking at an opening range. This calculates a specific opening range, and we use it for, when it breaks an opening range down, you can go short, or an opening range up. And so it's a really helpful indicator to use kind of for additional good timing. Available for Thinkorswim, TradeStation, eSignal, and Ninja Trader. And then the course, here's what we're going to cover. We're going to go through the kind of the foundation of seasonality. We're going to look at the seasonal statistics that I showed you, this price history analysis across all the different commodity classes. And so going to go through and show you how that's done, show you what I use for the resource, how that works, and then how to use it, and then how to build your seasonal watch list, okay? So we'll set up seasonal watch list, and I'll show you how to build that for, anything on that that's coming up. For it could be a stock futures contract, or then you just use stocks or ETF. It could be ETFs, commodity futures, etc. So we'll set up trade lists. I'll show you how to do that, monitor it using these seasonal statistics, and then also in combination, in alignment with the reversal and momentum indicators to kind of validate the seasonal entry and exit for a seasonal trade. Then how to catch that seasonal wave using that cycle model. Very important to confirm. Sometimes maybe the seasonal trend maybe doesn't happen, or maybe it starts too earlier or later. So this will really help you time into or out of a seasonal trade, or not do it. And then your seasonal trading review, we'll go through a bunch of different trades. And then an in-depth review, how to incorporate using the power cycle trading momentum model with the seasonal trend statistics to kind of align with a good timing entry, using the momentum flows to confirm trend direction and strength, how to use a cycle model for advanced. This cycle reversal gives you an advanced cycle alert, and this is what we use for kind of the alert to potential change in cycle, which could be leading into a seasonal trend or seasonal spread trend. So we're going to look at seasonal just outright, longs or shorts, and also a lot of seasonal spread trades and how to do those. Then how to set your profit targets and your stop loss targets, which would typically I like to use Fibonacci and average true range. How to use your moving averages, which I refer to as automated trend lines, to confirm the beginning of a seasonal trend. The seasonal swing trade rules. So I've got specific rules that I'll give you as a handout, and specific exit rules as well for the risk management. And then bring it together. So we're going to go through different spread trading strategies that are going to be involved in either using futures, or if we use options, we can use what we call synthetic options. So we'll go through how that works, how to trade spreads, because it helps lower your margin costs, capital at risk, and increases your returns because you've got lower capital that you have to put up. So spreads are great for that. And then how you go about analyzing your trades based on your margin, which is your capital required at risk. Trading your seasonal watch list. Again, we're going to have a watch list set up that you can monitor then with the cycle model to see if it's time to get in or out. And then we'll go through some just simple kind of basic option strategies that you can use. If you don't want to maybe just go long the, outright, we can use options to do it. So I'll take you through some spread trades that we can do that with. Then you'll get the resources that I use, seasonality statistics, and an ebook all about futures. So the last time I did this course, this is a little feedback. So, oh my God, never expected to learn this much in a course. You open a whole new asset class to trade. Kudos on the quality, and you have shown me that I can drink from the fire hose, Jim. So Jim's still a long-time member. I don't know if you're still here. Hey, Jim. And then from Lee, this was an amazing course, Larry. This is stuff I had no inkling about. It was like a graduate school course. Nobody else talks about this kind of trading. And then Dale, another great job. I learn so much every time I listen to you talk on energy and seasonality. I've taken this course twice, and I'm going to take it again. So that was from Dale. So with your enrollment bonuses, here's everything you'll get. So if you do bonus package 1, you're going to get everything. You'll get the price target mapping course that I did back in February. So this is using Fibonacci, moving averages, support resistance, standard deviation, unusual option activity. This is how we can price out our targets for either upside moves, for profit take, or targets for defense that we want to set up. So it's a step-by-step course centered around using Fibonacci, how to, what I call map out where price can go for your targets. So you'll get this course, a 3-hour plus course with all the PowerPoint manual handout. Then you're going to get this other course, my pairs trading course for market neutrality. So this is kind of offense, defense trading. And this will be for package 1 and 3 as well. So this is a extra bonus course here. So it's an on-demand course that teaches you how to trade stocks or ETFs or futures using spreads or pairs trades, which are what we call market neutral type strategies. So this is how most of the hedge funds, that's where they get their name hedge fund, because their hedge funds are going to be long short something. So they're always trading pairs. So this is basically, you'll learn how the hedge funds trade, doing this type of directional pairs trading to reduce directional exposure and margin expense. So really good course, how pairs trade offer a safer way to generate returns, whether the market is up or down, because it is a kind of a market neutral strategy. Best strategies for pairs trading, take advantage of being market neutral. The best pairs for trading stocks, ETFs, futures. So this course will teach you what are the best, stocks or ETFs to pair, and then how to actually measure the correlation. So there's all the statistics in the course will teach you how to actually marry the correlation. So if it's something that highly correlated, then that's even better, So it might be that 70% correlated to something that's paired with or 80 or 90. So this will teach you how to see, what the correlation is, and the resources I use for that. And then also talks more and teach you how to use synthetic options. So if you don't want to go long the outright security, we can do it using what we call a synthetic option structure. So they'll teach you that in the course, but I'll teach you that in this course coming up as well. And then my proprietary formula that I use for these types of trades. So get that. And then everybody will get the 2 free months to the seasonality vault, is what I call. So these are giving you the seasonal statistics that I showed you today. And then you'll get these. So these go back 15 years of historical seasonal data. So it really helps to, pick out the future seasonal trends that are starting to come up. It'll show you the statistics, the charts that go along with it. And these are they'll be typically 85 to higher winning percentage. So you can see earlier, we had trades that they knock it off at 80. They don't show any under 80% reliability. So you'll get that for the next 2 months. And then if you stay on as a member, you'll get this every month. So here, you'll get the statistics like this each month that you look at. So here's like what's coming up in October. So we'll be 2 months so that you'll currently be looking at what's coming up in October and November. And so then you can go through, start building your list. It gives you breakdowns of the ones that you want, gives you the charts, everything. So you'll have all these at your fingertip for the next 2 months for no additional cost. And then 4, you're going to get 1 trial free month membership to my trading club. Now, if you do the alert package, you'll get this for 4 months. Okay. So this will give you access to my trading room, open every day from 9:30 to 10 a.m. Eastern. So I'm in there each day asking, you can ask questions, go through whatever we're looking at, trade setups. And then this also provides you the daily market update videos that I do every night after the close, members trading videos. These are archived, and we do a weekly Q&A live, usually every Tuesday live and recorded, plus the Trader's Educational Vault, which will give you the seasonality vault as well if you do this, and discounts of 60% off on everything as for any courses or trading software. 5, we'll do a follow-up support Q&A and probably do a day or 2 days later after the course, so it's fresh on your mind. Plus, you get access to virtual trading room. So if you do that for 30 days, you get that as additional support. Then you'll get 6, my futures trading commodity guide, so blueprint guide on what you need to know about futures to get you started there. And then you'll get my trading tutorial on the cycle directional trading model that we're going to use in the course. So that's everything that's covered. And then if you're interested in the elite service, here's the open and close service here. We'll go through. Here's from Wally. He said, Larry, I have to mention one thing. I'm subscribed to a lot of services who send out trades. Some are good, others are not that great. But one thing that I would like people on this webinar to know is that when I get a trade from Larry, I do it blindly. It's time to show me that this man is dead accurate on his recommendations. Thank you for the great service. And from Scott, it will be the best investment that you will ever make. Go with the elite package, great group of traders as well. All right, so again, just in summary, you'll get, if you do this, you can have this linked with package 1 that gives you, everything, all the indicators, all the bonuses, 2 pay, available 811, so you'll get that. So you're gonna get 3 months to the alert service, but you'll get 4 months to the trading club with this. If you don't want the indicator, the core model indicator, then you can do package 2 if you want link to that. And this is 611. So you get access to all this for 3 months, 4 months on the alert service. Typically 10 to 20 stocks or ETFs. Typically stocks and ETFs are the ones that are sent out. These would be for breakout trades, calendar trades, butterflies, and earnings trades are the kind of 4 different trade setups that are sent out. So when they're sent out, you've got a trading guide for each. I do a video review of it after the close. Trades are archived, so you can go back and look at it. Then you'll get the weekly trading room or Q&A for 4 months. We'll do that. You'll have access to that every week for the next 4 months. Daily market newsletter, video newsletter every day after the close for 4 months. And access to my virtual trading room for the next 4 months, and discounts on everything, courses or software on the website. But you're going to get 2 of the main software indicators that I have with this course. So when I send out the alert, I send out a suggested option trade. Some members take do their own thing, but I always give an option trade that you can use. What the entry level is, profit targets, what option series to use, stop loss levels and guidelines. These are listed and archived. And then we do, I do a setup video review after the market closes, video newsletter every day after the close, access to weekly Q&As, access to the virtual trading room and discounts on everything, plus the Trader's Educational Vault and all that seasonality statistics. So again, here's the kind of the win rate, 81%, really good high probability trades. Here are just a couple examples to show you. Here's a butterfly long condor trader alerts. I'll show you a few. This is one that we set up this last week. This was a butterfly on Tesla. And so when it's sent out, you can see that the text, this goes out what we use a service called Telegram, and it's really fast. So here's what it would look like. Tesla long, trading at around 294.75, daily cycle low, retracement reversal, high monthly open interest at the 300 strike. Buy a butterfly, the 292.5, 300, 308.33 at around $1.05. Summary long, the 1692 there. So did this now. Did this with a couple different butterflies actually. So the one I'm going to show you is one that we did 290, 300. So here was the entry, perfect entry right there. Right here on the 9th, it was trading at about 295, and then had this butterfly. We had two different ones. One was you could have done the 290, 300, 310, a $10 wide, and this was set up at 225 into the trade, and then Friday going out in the close, it was up, over 400 if you stayed in it. So a lot of members stayed in this trade. Now we got it earlier because the market crashed, but then this thing came back and just pinned it perfectly. So that was a Tesla butterfly. Here's just another example. This was on Valero. This was what we call a long call condor. We did this setup here. This was using what we call condor. So it says new Valero long trading at 116.94. And then it tells you how to do the trade, gives you a summary of the trade so you know exactly what's going on. Here's a profit take alert sent out on the 18th and another one on the 26th. So just, constantly updating you with the alerts by text, or you can have it by email. And so here's the trade set up on the 17th of August in there. And then out, we had profit take on the 19th, 25th, and 26th. And so did this as what we call a long condor spread. So we were long like the 26 August 117 called short the 121 and then short a credit spread against it. So it gives you this what we call a condor kind of structure here. So really high probability, low risk trade. And here it went out right between the two short strikes, which is perfect. So set the trade up $1.07, went out, at 400. So this was up $293 on that. So you can see the risk reward on these things are really good. So this one was up 274% return on that. So just a kind of a example of what to look for on the long condor butterflies. And here's another one. We did a long put butterfly on QQQ. And so this one was short trade right here, sent out the alert to do the trade, got in and out. So the butterfly was here, set up $1.65 out 593. This was up over 400, so 259% return. So a couple examples there. And then here's an example of a calendar diagonal trade. This was what we did on Phillips 66. This was a calendar diagonal. We entered in on the 23rd and then profit take on the 25th and 26th. So you can see the text alert there. Got in right here. Momentum shipped up. Did this with the calendar diagonal. Got in at 430 out of 590, up $160 on that spread. So 37% return in 3 days. But this course is going to be focused on adding this kind of things to your, your trading, but also now a new thing that you can start looking at is how to use seasonality. So that's everything you'll get. And if you have any question on that, let me know. Otherwise, somebody want to look at S&P and the diamond towards the end of September, early October, we can do that. Yeah, exactly. So John, question from John, if you're a member to the alert service, yeah, you get it for as long as you're, you know, in the service. So if you're in the alert service and you've got another 6 or 7 months or whatever, we will let you have that. Yeah. Okay. Oh yeah, absolutely. Yeah, sure. Please do. Yeah, please. We're flexible. So here's somebody took the course in the past. Appreciate that input. Yeah, just let me know. Just send me an email. Yeah, we'll do that. No problem. So thanks for your thanks for that feedback there. Thank you so much. Thanks for that feedback. And yeah, just send me an email. We'll be happy to swap it out. Okay. Yeah, Bob. Yeah. Um, yeah, just send me an email. Yeah, yes, you've taken it 3 times for sure. So just send me an email and I'll take care of you. So just send it to Larry at Power Cycle Trading. Let me see if I can spell that right. Okay. Yeah, just send me an email there on that, Bob. Okay, see you later, Lee. All right, so okay, so the links again, let me just give them one more time in case you've missed them. So for this course package, which is everything without the alert service, $397, you get everything. Use this payment link here. You can just click on it, it should work for you right there. And then if you want just the package 2, which will give you the cycle reversal, but not the core model indicator, etc., use this link here, powercycletrading.com/CSEA1. Use this link here. And then if you want to combine with the alert service, all 4 services you'll get for the next 3 months and 4 months of the trading club. Then if you want to renew, you can. And package 1 would come with, you know, all the indicators and bonuses. So this link there will be $811 with a 2-pay if you'd like. And this link is right here. Let me put that in. And then, last but not least, if you want it with the course package 2, which is without the core model, it's $611. So use this link here. Okay.